Ladies and gentlemen of the crypto space, we're live on Friday at 11:29 a.m., January 22nd. We're heading into the end of the month, the final week. Times are changing. Stuff going on. For the inauguration, we have the new president, the financial markets are all distorted. We know the stories we've been talking about with the China narrative, central banking, printing. The crypto market is appreciating. The equities markets are uh, distorted, as I said, to say the least, but it's to an extraordinary extent at this point. So, what does this all mean? And how do we put this into, you could say a framework, but just a top down, big picture perspective? Folks think of equities market stocks. What do I buy? What do I invest in? Or crypto, you're buying something, it goes up and down in price. Or can't say you get a bond and you get interest anymore, or a bank account and you get interest anymore. So what does this all mean? How do you look at things? So a big thing in physics is and also financials is a macro perspective. Folks talk about it all the time. It's what Raul does for a living, um, and that is a perspective that is overwhelmingly meaningful to appreciate any particular market. You can't understand a market really unless you understand where that and how that market fits into a bigger picture. And that's what I want to talk about a little bit today. Obviously, we're going to dig in deep on charts and Q&A as always. Out or underperforming, everything reduces to that. So that is one phrase that kind of fits the topic that I'm thinking of. And we'll bring up Micahel Saylor and how he talks about energy, and that's a great analogy. And it's related to this title of the stream. Today's episode, along with all episodes, is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial, DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. Crypto chicks in the house. G, G, G4Ka. I'll get that right one of these times. Hello. Ben Convery. Shoot me if I got it wrong. Sup, everyone? I'm good. I'm decent, and I try and be humble and appreciative and helpful. So thank you for the kind words. Um, well, let's start with talkie talkie first. Talkie talkie is that to understand any particular market, we have to understand the big picture. I myself am completely fascinated, along with most people that probably join me on the stream, with the crypto markets. It's a burgeoning, nascent market, microscopic as compared to other large scale global markets. One second, guys. Which means that it has, from like a Micahel Saylor perspective, the lowest amount of energy. And if you think about the other markets, they have a huge amount of energy, potential energy in particular, is the way I've been thinking about it this morning. So, potential energy is the accumulation of energy, whereas kinetic energy is the consumption or deployment of energy. So, and this goes into like the Twitter post I made about what is a crash. And folks get nervous and fear that word, and rightfully so. It means an entire market, an asset class is depreciating, and all signs. You can watch Sven and other brilliant chartists and other brilliant macro thinkers that the equities markets are extraordinarily overextended. Market cap to GDP at astronomical, beyond historical levels, and arguably unsustainable levels. So that goes into this topic of today, that there's a huge amount of potential energy that could become kinetic and start moving. So, what is a crash? A crash is when those assets start to depreciating, and that basically entails people are selling them, turning them, they're liquidating them. Obviously, fiat is the easiest intermediary to store that liquidated value. But this plays into what we talk about often. You're going to put it in a bank, and and if you're in Europe and you're in Switzerland and you have to pay interest on that money, you're literally paying the bank to custody the fiat. So maybe more so than any time in history, um, a crash or a collapse of equities markets isn't going to be stored in fiat, and if so, it won't be for an extraordinary long period of time. There's just zero incentive. In fact, there's, whether it's intentional or not, there's extraordinary disincentive, extraordinary than any other time in history, disincentive to store enormous amounts of money in fiat. So if a large hedge fund or family office is liquidating $50 billion worth of equities because the market is completely collapsing 20, 30%, a March event or whatever, they're going to move it into fiat because it's the most liquid, temporary vehicle of value transfer, but it's painful. You can imagine 50 billion at minus, minus 1% or whatever the percentages are that are floating around by banks around the world. Minus 1% a year on 50 billion. Yeah, that's not good. You're bleeding money every day, like bleeding money every day. So that money is going to be redeployed to, as the title of this stream suggests, markets that are outperforming. And basically, this thing I say to everyone, you got to get out of fiat because you're guaranteed to lose 8 to 12% a year just to inflation. From a consumer perspective, goods and services, as per the Chapwood Index. But even more so from a large large financial player perspective. They have to get out of that fiat position to avoid enormous capital loss, and they'll have to get out of it quickly. They'll have to get out of it to a market that's outperforming. And any market, literally any market, will perform better than the fiat markets, which are absolutely, unquestionably guaranteed to lose value constantly, predictably, because of inflation. It's fascinating times. Lynn Alden is probably the best thinker on how these times compare or don't compare to past events. I'm far from that experience to discuss that, but these are my understandings of our current situation. I see an equities market collapse as the beginning of a massive redeployment of capital. Massive, the largest amount of capital in history being redeployed to other markets that are outperforming. Now, clearly, crypto markets are outperforming, but it's a microscopic market. You're not going to have hundreds and hundreds and trillions of dollars. Can you imagine like the derivatives market? Half a quadrillion dollars, $500 trillion. No, redeploying to the crypto space. Now, yeah, obviously, speculatively, some crazy stuff could happen, but I would imagine just a small percent of that. So you could have a massive, massive inflation of the crypto space in the case of an equities market correction, so to speak. But it's more likely than less that the vast majority of that capital will flow into energy, commodities, mining, infrastructure, which is kind of like commodity, with steel, copper, concrete, and construction companies, and precious metals. Probably less precious metals, and that's the whole question. We're asking how much flows into precious metals versus the crypto space. But if 95% of the amount of capital, so let's say of the 100% of capital that historically would have been reallocated towards precious metals, if 95% goes to precious metals and 5% goes to the crypto space because it can now, it's large enough now, yeah, that would be spectacular. A couple trillion dollars being liquidated. 95% of that goes to commodities, energy and mining, and the 5% of the 5% that would go to like precious metals. Uh, Now only 95% of the 5% go to metals and 5% go to crypto space. That would just still be an exorbitant amount of money, given how much potential energy is pent up in the historically overpriced equity space. I mean, how could you have companies running around at over 1,000 P&E? I mean, this is just, and if you want the hyperbole for how overextended the equity space is, none other than Sven Hendrick, and that's who you're going to want to entertain. Let's show you Sven's page. So you follow Sven, and then you want Stephen Van Meter for the play-by-play when the system experiences an extraordinary correction. So he's going to have the commentary, and then you'd have Stephen with the play-by-play, just like a newscaster, a broadcaster, a sportscaster. He'll tell you why it's happening and what specifically it's doing and where the value is flowing. I can't pretend to be as experienced or insightful or have ideas on the level that they do. They have years more experience. I'm young, relatively speaking. But this is an observation that overwhelmingly has merit. It's big picture. It's comparable to the perspective that Micahel Saylor often has. He thinks in terms of energy. I appreciate that, and I agree with that. You can also think of this as uh, buckets of water, if you want to take an analogy like that. And like think of a dam, and the part of the dam breaks, and that value is going to flow downstream to other places where there's lower potential energy, higher potential energy. It's like voltage, 5 volts, and then the energy flows to places of lower potential energy. That's the way these types of physical phenomena work. I don't want to skip over who's in the stream. Let's see. I'm feeling much better. I'm back on track. Wife is sick. Sister-in-law is sick. Mother-in-law is sick. I'm exhausted right now. My little 2-year-old daughter, for an hour, wouldn't go to sleep in her crib, so I brought her into my bed, and then she slept for an hour. I'm digressing, but she woke after an hour. She was up for an hour saying, "Daddy, daddy, daddy." And then she was like, Daddy downstairs, Daddy downstairs, Daddy downstairs. So it's 4 in the morning. I bring her downstairs for like a half an hour, 45 minutes. Probably the biggest mistake of my life. Wife forced me to get her back to sleep at probably about 5 a.m. So I slept like 3 hours last night. Oh, wonderful. Bruce from South Africa, always a pleasure. Charlie G's in the house. Ben says, yeah, we're decent day so far. Macro Mindset did buy another 10 mil. If I had 10 mil, I'd sure as hell buy more. Hit the likes for Noah. Thank you, Crypto Chick. I appreciate it. Ben, battery running low. The videos will be here. They will always be here. Matt's in the house. Aloha Friday. Yes, yes, indeed. You had to go there with the electricity, knowing I failed that subject at the academy. Lewis, I'm sorry. Sorry, my brother. Um, it's physics as well. I myself have a bachelor's in electrical engineering. Not that my career is anything related to it, but that is where my education comes from. And I always appreciated that's maybe consistent with why I'm describing to you a macro perspective. What I really got out of school wasn't the specifics and the rigorous nature of the study, but it was the philosophy. I always loved philosophy, and when I think back of my engineering curriculums, the most I got out of it was the ideology, the concepts, and the relationships between the concepts and cause and effect and things of that nature. So that's quite interesting how everything relates together, and all of that contributes significantly to how I present this information to you guys. I hope it helps. Um, Igor, what a show in the crypto space. Yeah, it's crazy. Yeah, let's look at Bitcoin. Let's have some fun. I digress a lot. So, yeah, oh my god. Oh my goodness. All right. So we had a massive wick to the downside. This was over a $3,000 candle. And if we go over to the 3 hour, I removed the drawing. But last night I posted that we might have an inverse head and shoulders. And that's basically something like this. Oop, bloop, bloop, and bloop. So there you go. The inverse head and shoulders played out. We eventually had the push to the upside. Notice that we're not above. And look, there's resistance right here. You got the 100 SMA and the 30 min acting as resistance. But a short-term time frame, longer-term time frame, what's most meaningful is we pushed above the 200 SMA and the 200 EMA, and we retested. You guys know what I talk about. Let's get this out of here. And let's draw. So you got a breach to the upside. This is horrible because it's on the 4 hour. The retest, and then you wait for the higher high. And that's your confluence for a more likely than less likely bullish continuation. And that's exactly what this is. Breach to the upside of a resistance, retest down. Bear in mind, this is the 4 hour, so you got 3 hours and 14 minutes for this candle body to close. But once it does, if it is above the 200 EMA and SMA, yeah, and dare we print that higher high. Yeah, the algorithms, humans program the algorithm. So these very concepts that I talk about are exactly what the algorithms are expressing um, and acting on. And that's exactly the way they'll respond. This will be a bullish continuation. We'll see some significant price action to the upside. From an oscillator perspective, we're in a good position. It's not too bullish from the RSI and MFI, but we did bottom bounce, which is a good sign. It's heading in the right direction. Stoke is getting a bit high, but there's no reason if you pass 70, you can't rip to 100, and you can have like a 5,000 point rip to the upside. So Stoke is a little misleading in that regard. A derivative of RSI, that's what Stoke is. So there's plenty of room to the upside to the rip, up to the up, plenty of room to rip to the upside. But then you zoom out to the daily and you realize really what's going on. And this is quite consistent with the way we talked this morning. Big old macro perspective. Stoke is completely bottomed out. So that's what this dip did. It's a cleansing. And sure, you can get into the subtleties of what the cleansing really means. Obviously, transfer of assets from weaker hands to stronger hands. But from an oscillator perspective, yeah, it's meaningful. This thing is completely bottomed out. If you had a big bullish price action, you're not going to have it with the Stoke at 90 and 100. But you're much more likely to have it with the Stoke completely bottomed out, close or near to zero. MFI, which means basically volume fell off a cliff, volume sensitive RSI. And strength still at 50, give or take. That's good to see. Much potential there. What was that observation I had the other day? Check this out. You guys got to see this. This is really cool. So I'm pretty sure this is quite meaningful. Back in 2017, here's the rips and dips. Very different market in 2017. You probably like Willy Woo and some other folks that probably could give insight how this market currently compares to the 2017 market. This market is overwhelmingly driven more so by large players, macro, institutional investors, family offices. Retail starting to get in. Willy Woo hinted at that. But what I noticed was that the rips and the dips back in 2017, RSI significantly went below the 70 line on the weekly. Very obvious. I mean, look at these rips and dips. We just had a dip, and it looks like we're stabilizing, pushing back above the moving averages, printing patterns that look pretty much close to what I always describe as the best indicator for bullish continuation. The breach of resistance, the retest, and the higher high. We have 2 out of the 3 right for that on the daily right now, the 4 hour right now. We have the breach of the higher high. Oh, what a mess. I'm not going to zoom in. I want to go back to the weekly. We have the breach of the higher high. We have the retest, the wick down. If that candle body closes and prints a new higher high, probably 4 to 8 hours from now, significant bullish continuation. So what does that mean from a weekly perspective? Check this out. The RSI didn't dip below 70. If bullish continuation occurs from where we are, that's very notable and meaningful, different. And that empirically says this current price action is different than what happened in 2017. A significantly less pronounced dip to the downside, less volatility, more stability as compared to what occurred in 2017. And that's profound. That's some big shit right there. Wow, that's cool. So, what goes on in the next couple hours, this is historic. That's, we're talking 2017 compared, it's 4 years. And over 4 years, this indicates something significant has changed. How about them apples? um, what am I missing? What am I missing? Folks mentioning my 2 year old. Uh, yeah, it was crazy. I was just like I was. It's kind of like you're so angry and frustrated, but then you look at that damn smile and those little teeth and those little tiny hands, and you're like, I love you. So she just drives you nuts, but she's so damn cute. Lewis, I know. Oh, yeah, she's a sweetheart, my brother. Charlie, daddy, daddy, daddy. Oh, that's good stuff. Um, New to the space, drinking info through a fire hose. You got it, Crypto Knight. This will not stop. I'm going to do this. And if you have any questions, you ask them. I'm going to hit on them and obviously hit on the topics that I think are most important, ideas, so on and so forth. Digilight, I don't understand Curve Dow token. It's an appreciating asset should accumulate. Curve is probably I have so never spread too thin, never go all in. I don't have too many assets. I have a basket of smaller positions relative to my portfolio size, 1, 2, 3%. But then I have only one, two, three large positions. Um, Ethereum, but that yeah, I four. Ethereum. Unfortunately, I know there's a lot of Ethereum bulls. A thing, but that's the thing. If Ethereum's going to outperform Bitcoin, you don't need to have as much of it as Bitcoin. The things that are going to outperform more, you want less of. I like that ideology because it's contradictory. It's not the norm. Most people think if something's going to go to the moon, you want as much of it as possible. On the contrary, you want the most of an asset that's going to perform the least. Bitcoin being that in this case. If Bitcoin goes 5, 10x, oh my God, the horror. Your least performing asset goes 500 to 1,000%. Come on. So if Ethereum outperforms and it goes to 10, 20 grand, as some of these boys are throwing around right now, you want less of it. That's just my opinion. I have my reasons that I try and explain as best possible. So Curve is one of my larger positions. Interestingly enough, my larger positions aren't because I bought a lot of it. It's because they've appreciated to become overwhelmingly the largest positions in the portfolio. I only had a moderate amount of Curve, and it's since up 100%. Period. So, and that's the case. Like Ren. Ren is it's my biggest winner. By far my biggest winner. Bitcoin's the biggest dollar denominated winner, but Ren is the biggest winner. I'm up 1,100% on Ren. That's crazy. Wow. I was in Ren at 6 cents in March, and guess what? If someone was in it, I've talked to people that have been in since 2 cents earlier, 2018, 2017, whenever they launched. Um, those boys are up 2, 3,000%. That's crazy. I only got 1,000%. Oh, the horror! Only got 1,000%. So Ren is by far one of my. It is the largest altcoin position I have, but I don't know what that means from an advice perspective. Um, it's up 1,100%. You know what it would have to be? You know what the price of the asset would be if it went up 1,100%? So, in order to experience the past appreciation, extraordinary things have to happen. So, makes it very difficult in sizing a position if considering an entry at this point, considering the past price action, which means there's more risk on the table, less potential return. I don't necessarily think it's going to depreciate because of the macro narrative that's emerging for the DeFi space that has enormous growth potential and disruptive potential. As I've said often, none of this at all existed in 2017. 2020, last year, empirically, with data, huge amounts of data, proved that this is different. These systems are superior to legacy financial systems. They have technologically deprecated them. And when you hear these yields, 20, 30, 40, 50%, it's real stuff, guys. Especially the yields from Aave, because that's a lending protocol. There's no tokenized subsidy involved there. And Curve. So Curve obviously has its emissions schedule where you get Curve as an incentivized yield. But bear in mind, that'll cease. There's a max supply for the asset. But look at this. You get 10% on dollars, DAI. 10% on dollars. Here's another pool offering 10% on dollars. Here's another pool offering 10% on dollars. These boys are offering 5% where you could use synthetic dollars, the synthetics asset. Look at these percent yields. Come on. The banks must be shitting themselves. That all a company, all a big bank needs to do is come in with $1 billion, wrap this shit up in something pretty, and all of a sudden a bank is offering 10% yield. And where are they getting the yield from? They're getting the yield from a sustainable source because these numbers, the top number, 5.66% here, this top number, that yield, is not coming from an inflationary source. It's not coming from Curve subsidy emissions. This is coming from transaction fees. Transaction fees are completely sustainable and are based on daily volume. Now, the Curve is cranking out $465 million over the last 24 hours. That is an enormous number, might be one of their largest numbers. They've been up in the twos. I remember when they broke 10 million, 2020. It was like 1 million, $2 million a day, 3 million, 10. And then we were posting 20 million, and they were like, "What's going on?" The Curve team. This is the first time they were experiencing that. And then 2020 ended, and we start to digest what occurred, and we realize something happened. And 1inch went from just a very initial platform, a hackathon. 1inch went from a hackathon project to something that definitely has outside investors and is a wonderful product that brings together the entire DeFi trading space. Maca is meaningful too. Maca. 0x has some serious transaction volume lately. So you go over to DeFi Prime /dex volume, and we'll let that load for a second. Check out these volumes. Uniswap with over $1 billion in the last 24 hours. Sushi's up there because it's meaningful. There is some sustainability, and they've pivoted and made good decisions. Questionable start, the memeage, the forking of Uniswap, but FTX acquired, and that's the story. So they've pivoted and created sustainability in many regards. And Curve with the 425. Wow, 1inch with 232, and there's 0x. This is meaningful. So 0x is a hard hit asset. It's not very appreciative of late. It had a very large run in 2020, just like Kyber and just like Bancor, which are on there, but very small percentages. And it'll have a run again. I mean, Kyber went up 1,000% in 2020. People made fortunes with Kyber, myself included, and Bancor too. Ripped 10x, 1,000%. You put in 10 grand, you got 100 grand. That's what happened in 2020. So DYDX is a heck of a platform. Balancer is meaningful, well, late to the party in 2020, but it's a very meaningful platform. Synthetics is massive. Synthetics was 70 cents in March of 2020. They're running around at $14. They were highest as $17, and it's probably one of the projects of the crypto space that has the largest scale and scope of potential. There's Maca, tiny. Kyber, incredible tech, incredible protocol properties. Yeah, listen. I've said this a lot. Fundamentals tell you where to look. Technicals tell you when. And Bancor, smallest on the list. But Bancor has incredible fundamentals at this point. Their impermanent loss protection has proved sustainable over the last several months, empirically in data, and that's extraordinary. The fundamentals are there. They tell you where to look. The technicals tell you when. Let me see what I'm missing in the stream. Um, that's curved out. Did you like curved out? You with curve gives you a capacity to receive revenue. So 0.02% of all transactions go to curve holders. So right now the APY, which is a spot APY, variable no doubt, is 13%. I've seen this high as 100%. So it goes up and down depending on volume. I guarantee you by the end of the week with $465 million of volume yesterday, this is probably going to be up around 40 to 60% spot. And you can imagine, can you just imagine if this was 4 billion, 40 billion, 400 billion? And instead of saying 9,000, this said 90,000 or $900,000 a year. So that, my friend, that is curve. You have a capacity to own a right to a portion of the platform's trading fees. You have the capacity to do that with 1inch as well. 1inch has small volume, but the potential for this to be doing billions of dollars of transactions a day is there in the coming years. And these are paying 22%. This is spot. I remember seeing this at 50, 60%, 90% at one point. So this will go up and down. And if all of a sudden they're doing $5 billion a day of transactions, you bet your ass this is going to be 150, 200% higher. And you own 1inch, you stake it, participate in the governance voting, and you're going to get this yield. And this yield is derived from spread surplus, which is basically a portion of the transaction fee. It's a sustainable source of revenue, guys. You lend your money to the banks. This is all liquidity providing. When you give money like this, you give liquidity to a bank deposit, but you're a freaking liquidity provider. The same as if you put liquidity into Bancor, Curve, 1inch. It doesn't matter. These are LPs. A bank is a damn place to provide liquidity, and they give you shit for your money. Whereas you see these percentages, and these are sustainable sources of revenue because people are borrowing. People are borrowing the money and transacting, and that creates the transaction fees. And they're borrowing the money because they're putting it to work, creating leverage positions, using that money to make money. And my friends, this is called monetary velocity. Monetary velocity is basically what's collapsing. The savings rate in the United States has gone through the roof. People aren't spending money. The loans, the data, you can find it. Stephen Van Meter probably has it in his history. The loans have collapsed in around the world probably because of fear that people can't pay it back, and that's monetary velocity. So basically, that is best described as M2 velocity. So this is the velocity chart. It's slow because it's done what, quarterly? Quarterly. So the velocity of the financial system globally collapsed. That's what's going on, and this isn't getting better. It's probably collapsing. Maybe it'll tick up because the scammers do a Q over Q GDP. So if we're down minus 50% GDP compared to 2019, and compared to last quarter, we're up 30%. We're going to see a 30% GDP print. Meanwhile, compared to last year, we're down 10%. So this is going to be skewed in the coming quarters, probably bumped to the upside as Q over Q GDP bumps. But year over year, if this chart was drawn year over year, it's tanking. It's near or close to zero. And on the contrary, what I just described to you all in the crypto space with the DeFi space, the monetary velocity is basically vertical. It's straight up. It's what it is. It's some real deal shit right there. Yeah. So Charlie, you mentioned the 4 hour candles. Yeah, each one of these is 4 hours. Well, that's a weekly. So that's big picture. I appreciate big picture more than micro. Waste of time on the micro, but you can zoom in and get a good view of recent price action. Let's clear this off for 2 seconds. We're going to wrap up the stream in a second, but I'll show you guys this. Oh, zoom in. So where are we? How are we with my my sequence? Rip to the upside, retest, holding above resistance flip support, 2 hours and 54 minutes until resistance locks in as a resistance flip support. Algorithms programmed by humans will respond the exact same way. Bullishness, and dare we break to a higher high? So when the algorithms are coded, they look for confluence, just like I'm describing to you. Confluence suggesting bullish configuration, some continuation. Someone coded a bot to look for these types of sequences of events. So if you get a break, if the candle body closes above this white line, and you have a break to the higher high above this green line, something like that. Boom. Yeah, that will trigger. You'll have an effect. You'll see something. Something will occur, and it'll be spectacular, pretty much. Igor says, crypto check, and Igor talking about Ren. Any chance the future? No, they're not going to reduce the bond because the bond, there's no reason to. The demand is there. Bonds are just through the roof. Here, check this out. Uh, So 6 new dark nodes. I don't know why people are liquidating. I don't know what they're thinking when this thing is producing $633,000 a month in revenue distributed to 1,700 dark nodes. So that's crazy because I often tell you guys if you buy low, sell high, you're going to sell for what? Fiat? And what was the matter with the asset? Why did you sell it? Didn't you love the asset enough to buy it low just to sell it high? No, what you want is recurring revenue streams, which is basically a common theme that we talk about. You want yield, you want interest, you want 5%. And dare you want 20%? You could probably get it. But here, you're getting 15, 20% a year on your dark nodes. And if everything just keeps going, it's going to appreciate. Matt, thank you very much for the tip. I really appreciate it. I don't have any insight on RFI. No idea. Alpha. That's the worth looking at. Alpha, or was it APY? APY Finance, or there's a bunch. There's a lot of new ones. I've retweeted a bunch recently. There's a lot of new ones. They're like DeFi automation. Alpha is probably the more interesting one of late. But Badger's has quite a large following of interest in the crypto space. But you could enjoy those, entertain them, play around with them. But when you got Curve that has $2.2 billion of TVL and Uniswap and 1inch, you know, it's kind of like you go to the macro caps or the micro caps. But bear in mind, what the heck am I talking about with Badger and $747 million of TVL, total value locked? That's how much money people have put into the protocol. With great risk comes great reward. There's risk. I mean, look, even with Curve, I could mint my Bitcoin and throw it into Curve and get. Oh, where's that pool that's throwing out 100%? Here, 93%. You can get if you have whatever Bitcoin, you can get 100%. Obviously, the yield is denominated in Curve, which would be huge because Curve generates revenue. Can you imagine getting 100% yield on your Bitcoin? So obviously, it's spot; it fluctuates. But a lot of people, what they do is they use Zappify. And you're able to, and that's expensive. So this is really relegated to whales, more or less. You're probably talking like 250, 300, $400 to zap between pools. But if you have, 5, 10 Bitcoin, you're throwing around a couple $100,000, and the 93% drops to 50%, and then you zap it over to you maybe swap it over to MakerDAO, and now you could have a collateralized debt position and pop 30% of it in for 150%. And USDN is interesting. I mean, look at the GUSD is really cool. That's Gemini's dollar. Gemini's a big deal, boys and girls, and that's given 118% on the dollar. So while obviously curve emissions are a subsidized yield, and you may in turn instead prefer to focus on the actual real yield, 5.3%, with a big number up here with 10%, because that'll be yield denominated in DAI and USDC. But curve is the speculative, and that's why you guys brought it up. It was 30 cents. It's at 205. Wow, curve's up five. What is that? Five, more than 600%. Up 600% in like 2-3 weeks because of this, because of their partnership with synthetics, because of the yield. Um, Reggie Middleton, the OG DeFi patent in 40 countries. No idea, did you guys? Sorry. Veritasium, no knowledge. Charlie, yikes. A lot of yikes on this channel, boys and girls. Whole lot of yikes. Igor, I've never seen how many empty store spaces in Helsinki downtown. Yeah, it's everywhere. I mean, it's everywhere. I've seen them. I've seen it at very wealthy malls down in South Florida, and dare you go to there's parts of Miami that are basically ghost towns. They're just empty, completely empty. I used to work at a WeWork downtown, and the entire neighborhood has no stores. You'll have like the Chinese restaurant or the Indian restaurant around the corner, but the entire neighborhood, the big store, just like 20 stores completely shuttered. And this was, guys, this was like last year, the year before. I could only imagine it now. I haven't been downtown for all of 2020. Yeah, it's crazy. Uh, Fidel, Curve, some serious stuff. Thank you, everyone. 18 people watching, 14 likes. Let's make that 18 likes. Friday, 12:11 p.m. I wish you all a wonderful, wonderful weekend. If you have any thoughts or ideas, ping me on Twitter. I'll talk about it Monday. Um, I appreciate everyone. I hope this helps. That's all that's important. It's important to try and make better decisions and take less risk and capture more reward, protect your gains for yourself and your family, and all that fancy jazz that I talk about. So, thank you all for joining. Have a wonderful weekend. Smack those thumbs up buttons. Tell everyone to subscribe, and I'll catch you later. Peace.